All right. Y'all already know who it is. Faith in the Strat. SPX gang. What up, y'all? So let's do it. This one's gonna be for compound tribe. So first off, shout out to y'all. Y'all been killing it with the compounding this year. You know, been killing it with the accounts, and we're about to keep it up. So we can go over how to help y'all compound further and how we're gonna keep it up. So this is gonna be a 4-part presentation. Each part will be described in these examples. The first part is gonna be edge. What is your edge? What is your process? What resources are you utilizing? Part 2 is going to be risk, understanding your exposure and your risk. Part 3 is going to be sizing, because size matters. And part 4 is the system to generate repeatable and predictable outcomes. So, your edge, not my edge, your edge. Understanding edge, the difference between a decent trader and a great trader. The thing that will take you guys to the next level is understanding your edge, period. When I say edge, I mean what personal characteristics or traits you have within and outside of your system that give you a major advantage on the market. So what I mean by major advantage, I mean, it's almost like you see something. So you guys are always on the live call. I'm not sure if you guys noticed on Friday, I called the top of ES almost perfectly. Was anybody there to see that? Hopped in puts. I'm pretty sure because y'all all got puts, pretty much. Everybody hit puts. Y'all hit off that day, spam up a 1. Yep, you saw it rock. Yep, everybody caught it. Everybody caught it. Hold up. Hold up. Actually, let me record this real quick for the proof. So who all caught puts from that call out on Friday? Let me see. Let me see. Yep, 111%. Yep, we all. So the good thing about SPX, we all seeing the same thing. We all trading the same thing. We all about to win together. Yep, easy, easy, perfect. So now, what do I mean? Oh, yep, 125% called in the AM. So this is going to go into my edge, but also how you develop your edge. So some of my edges include divergence. Number one, right now, one of the highest quality edges that I personally use. What do I mean by divergence? I mean, each of these charts, this list is my holy grail. This is my new holy grail. I always have my clearly, where is it? Holy grail list. Where's that shit at? Boom. Traditional, but this list right here, this is like Holy Grail 2.0, new and improved, because this list tells me every sector and every top weighted ticker. So I have NASDAQ, SPY, Dow, gold, oil, and Bitcoin for Merit and Riot. Why is this so important? Because this helps me develop a thesis coming to the market every day. Every single day when I come to the market, I'm more prepared than the average trader because I have 3 or 4 times the data. So most traders are just seeing, obviously, if you know, on a Monday, oh, from here to here, we're just opening 2 up. If we were to cancel out this on the Dow. So we look, we go DIA. Let's look at DIA on the day. And we'll go to daily for DIA. Most traders just saw this. They saw Thursday, Friday, we opened inside here, and then we came up. So at one point, if we go back in time, Friday on rewind looked like this. Let's go to replay mode. Boom. This is what they saw as we're pushing up. Let's go to the 5. It's what they saw for open, right? Boom. Before the drop. So we go forward. Boom, 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 boom. And this, okay. What I saw and why I was so confident. This is my edge. Understand your edge and understand how we're trying to compound these accounts for everybody. Friday, what happened? The Dow Jones came from major lows, right? Ran up technically 3 levels. You know, I've been using a level-based system. So we have level 1 would be down here. We have a level 2 low down here. We technically have our level 3. But what happened? We ran up Asia. London made a low. So off open, we actually had an SMR down. Just know anytime you see this slight angle, there's likely to be an SMR. Not always, but a lot of times there's going to be an SMR because that's a trend line buildup. At the same time, what happened? Dow had this low. ES and NQ were sideways. So ES, NQ, sideways. Then as NY starts to open, look where Dow is running to. So me noticing that right away gave me an idea, because the main thing I noticed was ES was in this tunnel. And this is something, part of my edge, I've started to notice. Whenever you see ES in a parallel channel on highs or lows, they're getting ready to distribute value. That value is either going to get distributed down low or up high. It's going to depend on where you're at. So when I looked, I realized, where were we? What's to my left? Structure, where is it? Below me, not above me. We're up high. If we're up high and we're around a kill zone, I know we're likely to distribute down. So me seeing these highs, these equal highs, realistically, this was just turtle soup. As soon as we made this high, which was equal and right under the news candle, right? This is right under the news candle before open. As soon as we rejected and we started to open here, I knew off open, we were going to push up, and we had a very high probability of running this news candle. Now, why was that important? It's because if this is parallel, but NQ is way below, I know NQ needs to run up higher to catch up to NASDAQ. To ES. So if it catches up, it's going to run this buy side. So I knew it was just a game of divergence that was forming, because these all need to take a high that, look, YM had already took. So you guys see that? YM had ran highs before the kill zone open. Anybody see that? Press 1 if you're seeing that. Perfect. So get it. If we purge buy side, what are we likely to do? Exactly. We're likely to distribute to sell side. So since YM has already ran highs, I realized we've run highs, we're likely to distribute further down. So it was very easy, because this was a turtle soup, and I knew we could very easily punch up and down through ES. But NQ was lagging. So the only thing that threw me off was how aggressive we flew up. Like, we flew up a little bit higher than I expected. But looking back, it made sense, because NQ was the leader, which it plays leader to ES a lot of times. And so since it had such a big upside, it just caused ES to run up above. But guess what? The whole time, what happened? This is 6:30. Look at Dow. Dow was hesitating. Dow was not trying to make a higher high. All Dow did was come to that same level of DSL. So once I saw this, I happened to be in Apple and Microsoft longs, because they both had a gap fill play. And this is what really gave me max confidence. And this is where the full concept of edge is going to really come in. Off of this M5, Apple and Microsoft are the 2 leaders of the SPY. I noticed price was hesitating, and looking back, I could have got out a lot sooner, especially because it was Friday. So perfect example, just something like I have forgot. On Fridays, obviously you can't hesitate, but like my contracts, technically, the price never went down, and my contracts were still getting eaten up badly. I was down like 45% here, but luckily they were starters, so I wasn't that worried. But seeing all these high rejections, this helps develop my thesis because I'm using Apple and Microsoft, the two leaders that should be leading the SPY, and they're both showing me resistance. And they were showing me resistance a little before ES and NQ, because look, ES just ran straight up and dropped. So we look at the time. It's 9:50, ES runs straight up, right? 9:55, we have this inside candle, but then at 10, we have this green candle. But look at ES. Look at ES. Look to your left at 10. You're looking at Microsoft here, they all line up. ES is dropping straight down while this is holding. Same thing with Apple. So once I realized ES was starting to drop, I instantly switched over and started buying puts, especially once I realized what happened. And this, you have to realize, if you notice, there was no retracement on this candle. Sometimes that's going to happen. These are breakaway gaps. Why? This is news liquidity. So there's not much they need to retrace because we've built up this channel. You see that? So understand, when there's major liquidity, a lot of times you're not going to get that retracement. You just have to be quick, which is why I was so aggressive. Everybody understand? Perfect. So why was this my edge? It's because there already was a thesis that we were going to purge, buy, and go to sell, but it had already happened here. And if I understand logically how indices work, they all want to play catch up and be the same or equal. So this has changed it from a likely to a very, very high likely. And then when I pair it with Apple and Microsoft, the two majors, and I notice that they're starting to diverge and ES is running faster, this gives me a guaranteed. So realistically, I could have played it both ways. I could have, since ES already dropped, right, which I played ES, I could have just instantly bought puts because I know I'm in a gap that's failing, right? I'm in a gap that's failing, especially on Microsoft. And since this is the lagger, I'm using this to predict the future by like a few seconds, 15, 30 to a minute. Because this has shown me well ahead of time the future. Look, 6:30, 6:45. This more than anything has shown me, because off of open, where's our open? There we go. Let's go to M5. This has shown me we've ran highs. All we're doing is retracing. This pattern, once you realize we ran highs, you can tell there's the wick. Look, certain structures you need to get more and more familiar with. This tells me this was, I already knew Dow was bearish the whole time. So seeing Dow bearish and Dow, like I said, fell before all of them. That was the easiest way, because now I know these two are running up to catch the Dow. Once they catch high and run buy side, which happened right here, this candle, the next candle, Dow flipped. Dow flipped red, which was right before this fully purged. So this candle, look at that. That gives you an extra 5 minutes. If you're paying attention to all three, let me go here. There we go. And right here. If you're paying attention to all three, at 7:05 is when NQ actually fully flipped. And at, yes, I'm sorry, 7:05 NQ flipped, and ES was also, ES and NQ both flipped at about 7:05. ES shows you this inside candle. It's a 2 down, but realistically, it's like an inside candle. This flip on the 7:05 happened where, look at Dow. Dow flipped here, 650. So you see how divergence now is giving me a very, very high probability setup. It flipped where? At buy side. So this is now a 90-10 setup. This is a 90-10 setup because I know everything needs to play divergence, which it does once this drops. What happened? Checklist. Are my highs ran? My highs are ran on all right here. See that? But also, highs are ran. Everything is equal now. Each one now has a higher high. So this drop tells me that these are playing catch up. And since they're purging high, what has to happen if the market works? What has to happen? I'm waiting. Exactly. But I have that 5 minutes is everything, because in the market, timing is everything. So giving me that extra 5 minutes, like I said, 6:57, 6:55, 7. Look, NQ had not dropped, EOS had not dropped. Apple had not dropped, Microsoft had not dropped. So seeing that, I could have got into any of these and loaded up on puts. Microsoft had the best structure. Apple was a little choppy. But since I liked SPY, SPY had the best setup, I went with SPY. But I'm just looking for the highest probability setup over and over again to play. Now, this is a setup, especially with SPY, where I'm going to try and put max size, because I want to maximize my exposure, because this is such a 90-10 high probability. So let's go back and understand sessions. Sessions is going to go right back along with divergence. Asia, London, NY. NY, expect a high or a low to get put in. NY, we run the kills on high and we attack it back down. Guess where we're going? Back to this channel. So how often, think about it, are you going to see price trend in the channel, rip up, and then stay in it? Very often. If it does, that's called a false break. So it'll do a small, but when it pushes up like this, this is a failed breakout. That's a grab. A little small swoop is nothing. This grab should have shown you, which is why I'm so confident that we were going to drop, because look where we are. News, 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 kill zone, smart money reversal. Now, all I need to do is take a trade with enough size. And remember, we're just aiming to take trades with enough size to get our 25% a day, 10% a day. At the same time, with accept risk, which I'm going to talk about later. So, confidence. My confidence is what's going to be part of my edge, because I've seen these setups over and over again. And the more you see them, the more you're going to obviously be able to identify them and trade them. So what's going to help you guys, obviously, if you don't have the same screen time as me, is finding your setup. This is my favorite setup because I like to short. I like to find price when it runs up just like that, where we trade in a range for a few days, or we trade in a range because of news. So either a few days or a few sessions. This was a few sessions. This wasn't even a few days, just a few sessions. But these 3 sessions showed me off highs. The moment we ran it, we're going to drop like a rock, because realize when they hold it sideways, what happens? This type of movement is coiled up volume, which I always try and, show people. Coiled up volume, this whole zone. Why is this coiled up volume? Because look, this is very hard to trade. So traders are going to continually get off sides. Run the lows. Think we're going to attack highs. We fail, run more lows, keep running lows, run high, drop. This is coiled up volume. So what's happening here? They are collecting money in this zone. Anytime they engage in liquidity building behaviors, they do that to purge liquidity. So understanding cycles and the timing of the market, I knew it was inevitable. We could have kept running. I would just be like, hey, on Monday, we're going to dump. But understanding the timing and the cycles is going to help you. So once again, since I saw this setup, all I had to do was find the best looking ticker. Apple and Microsoft, like I said, looked okay, but SPY had the best, and I was already focused on SPY, so it was a lot easier. But I could have, this whole list is meant to find the best, because I'll just look and let's say, I think NVIDIA actually looked bad. Okay, NVIDIA didn't look that bad. NVIDIA runs highs. and has a good amount of downside to the day. I could have played NVIDIA because these all are the top rated tickers in the SPY. Or I could have played AMD because we came from way down. Expect us to take out lower day. AMD from high to low, still 1.7% drop. Either way, I just want the best looking ticker. The best looking ticker would have been one where we had the same setup, but instead it's like here, where it's like ran hella highs, because when it's ran hella highs and it's turning over and it has hella lows to take out, it's going to drop more than any other ticker. So understand, I'm just looking for the best ticker out of the SPY, out of NASDAQ, out of YM, out of gold, out of Bitcoin, out of oil every day. I'm just looking to find my setup. Patience. So the thing that's going to get you guys ahead of the game is developing that patience. And what I mean patience to wait through this, to not force a trade through this, to understand that this is coming. So when this happened, I hesitated and then I scalped calls, but I still didn't lose focus. And realistically, I shouldn't even scalp calls. It would be even better if I just waited. But I happened to catch it good. But I knew this was going to happen, and I trusted that this move was going to be enough to pad my account. This move was a 1% move, and then off lows was a 1.49% move on NQ. These contracts on a Friday were up like 300%. And then, of course, gold had the best drop, which I got here. So imagine if I'd been focused, I could have technically got gold here because I had this setup. It was just kind of hard if my focus was split. Where we at? Gold. So gold off that first 5. I ended up getting it at the 45. I remember. So I got lucky and kind of timed gold. But it came into this major zone, major imbalance, and same thing. It had sold off here. So technically, I could have got it on futures because gold opens ahead of time. But look at that major zone I expected the price to go through, and stop was up here because level 3. And I'm glad because back in the day, I would have put my stop too tight and screwed myself. And I've learned when the opportunity is high risk, I'm not high risk, high reward and higher R, you need to have a looser stop because it's a reactive area. You need to allow price to react. But, you know, from there to there on gold, that was like a 3% drop almost. And from where I entered, these contracts were 400%. I sold like half of them on the way down, got 100%, but realistically, it was falling so fast, I could have just held a full position. It was just, I was a little unfocused between the two because I had SPY and gold. But realistically, you just need one setup to go. That's what we're looking for every day, the best setup, the best short or long, the best purge. So understanding this patience is what's needed because every time we're patient, if we can sit on our hands and sit through a day where we move sideways and make nothing, that's going to give us the setup to catch a multi-100% play. Sizing. So this is where we go into sizing. So A+ setup. These are your 90-10s, high probability, very obvious, almost have to happen. The news candle purge is a 90-10. This is a setup when you want to start learning to put your maximum amount of size because you want your account to slowly be growing up, but taking advantage of these high probability setups. I remember before I thought of it, I was always consistent, which would be cool because if I'm using 1% and I'm getting a 10%, 1,000%, I'm making 10%, extra on my account. But I started realizing like some of these moves, like on these 1,000%, especially if I'm getting it on the backside of the move, the risk is the same, but my opportunity is much more. So if my exposure to the downside is the same, but my exposure to the upside is more, I need to increase the amount of capital I'm putting because I know that this move is going to move much further than the average. So that's where you have to learn to put in what's max size, which everybody's going to be different. For me, I'm just getting to the point where I'm trying to put in like a third or a fourth of my account with a stop where pretty much if I do damage or I'm wrong, I'm only going to lose about a day or so of income. And I'm just perfecting that. So more and more you want to get used to using max size when you have A plus. But understand, A plus setups don't come all the time. These are only going to come like maybe once a week or a few times a month. They're not really everyday setups. But these moves are meant to take advantage of. So when you think of traders, I always think of my favorite trader, Jesse Livermore. He made all his money off the crash of the stock market, the Great Depression. That crash made him hundreds of millions. It's those setups where they're slowly building up, where it's very obvious that you're going to make the most money. And that's why, for me, I like shorts, because you can see them accumulate. And this was just a one-day short. But last year, there were so many days where we were just run up for days and days, and it was very obvious the short was coming. This move was just a few session setup. If you really look at it, it's just happened in one candle. But what I'm looking for is more and more days like this, where just slowly, and then it sits to the side before it finally drops. And then look what happens. 2022, it gives you a whole nother pattern. So realize these same patterns play out on the daily as a 30, as a 30 and the 5. These are your high probability setups. Because this technically shows you the move has already happened. This is the uptrend line. This is the purge of all your liquidity. We all know that. We know that once we drop, liquidity been purged. Once we come here and we consolidate and we run up, you should know the moment we run this candle, you have two options. We're either going to continue and V up, or FVG drop. And this is another major high probability setup where you could have went in max size. And the moment we pass this this close, because whenever you have a parallel open and close, that's an imbalance created. Your stop could have been a swing high, or it could have just been this candle. Price never came back. You go in with max size, whatever your max size is, that's 534 points in a day. Holy shit. It's NQ. Okay, yeah. So that's 4% move on NQ. 4% on SPY, your contract is well over 1,000. So imagine you going in, you guys are already getting 20, 30% of your of your account, with one trade. Imagine you're going in doing that with max size now. That's how you start to really grow your accounts. You guys getting it? Perfect. So your B setups, this is what we eat off. These are going to be our high quality setups that happen every day, that have multiple confluences and higher strike rates. These are just your normal setups. So these can just be our basic strat setups, which I take still, but I understand that these are just B's. So these are just every day. So I'm using a B with the way we're trying to compound our accounts. I'm just going to, use like 10%, 20%, because the goal is with an account. If you're doing 25% of your account, you're getting 100%. There's your 25% at the day. If you're doing like 12 to 15, you need 200% trade. Or if you're doing like 30 to 40, you need like 60% or less. I know I can always get 100%. So I used to try and I've been aiming for just about 25% or less on B setups. These are just going to be your everyday setups where you still have a small stop, and you expect them to happen very often. These are going to be, let's see, we'll look at something that happens all the time. We'll just look at like Meta. This is going to be a simple, hey, this is a 3, a failed 3, and then a 2 up. It's just a 3-2 continuation move. Three-2 day. Only bad part about this one, it didn't have an immediate easy target, but you could have just used this swing. This is just a traditional setup. But understanding that simple move, you're waiting and patient. Boom, there we go. Go to M5. This day we exploded up 3-2. And your risk could have been here because it flew right through. We chopped up, hit the high. Could have held. I'm not one to hold all day, but you could have caught this first move, and then you could have noticed us holding and ended up coming back later in the day and maybe catching this one. Because if price pushes up comes down but holds, you're likely it's going to accumulate. And that's how I always know. I can tell if we go up and we run a key area, we stop and we instantly bounce, I know we're likely to continue down. But if we stop and we start chopping, then I'm wondering, because if we chop and we're sideways, I'm watching, because the moment we start making slightly higher lows, that's telling me they're buying this slowly, which is what happened here. Look, low, low, slightly higher, drop higher. That tells me there's buyers who are buying this short. But in general, I don't like to hold through this. So I'd rather we push up, drop, which is why on ES I didn't hold, because it started getting choppy. All I did was get out. So we go to ES. Let me go back to ES. Right here, I was like, I can't tell what we're doing because wicks were on both sides. So if I've already got this move and I'm up like 200%, I would much rather sell and miss out on this, because I don't know if we're going to accumulate and run back high before dropping, and I don't want to sit through that drawdown. So all I did was sell my position, and I could have got a re-entry here with this retracement, but I'm waiting for a clean move. I don't need to hit every move or every point. I need to find the cleanest move where I can put the maximum amount of size, because sure enough, once we dropped, all I did was end up longing here, catching a clean move, and then adding more here right before the end of the day. This was my second trade. The best trade would have been here, but by then I was already done trading. But think about it. I would much rather get 0.67% here, 0.3% here, and 0.50 here. So that's like, what's that, like 1.40, 1.4, 1.5% on the asset, you know. And then if I would have paid attention, I could have got a clean one here, which would have been another 2%. Then sit here and hold it, get this 0.7, and then I'm holding because I want to get what? Instead of 0.7, I want to get this extra 0.4%, right? So you got to realize your risk to reward is getting skewed when you hold it, because now your risk, technically, if you're waiting, if you don't set a clear risk, which most people aren't going to do, they're going to risk here or somewhere up here. So you're risking way up here to only get this. You're a 1-to-1. So you're going to eat your whole profits because emotion plays in. And I know, because I've done it before, and I know the average trader will do it. How many of you guys have done that? You shorted something, been way down, and then you waited too long. That shit spiked up. So you have to realize, and that's what I'm trying to tell people, most traders lose more money from not collecting profit than being wrong, because most traders, when they're wrong on a trade, is very obvious, and they're just going to lose that quick 30%, 40, 50%. But when you're wrong and you hold, not only are you losing more, but most people down here are averaging, which I've taken to my biggest losses doing that, shorting and be like, it's going to keep going and keep adding. And it just exploded to where I was in denial. By then, you're so emotional and in shock, you can't operate efficiently. So what did I do? I took risk and emotion off table, boom, to catch a clean trade down here. Because if I can just stay equity positive here and here, I can have more confidence to buy down here versus, let's say you held and now you're down huge, or you're break even or just lost huge money down here. Down here, you're going to be so scared to take another loss. While meanwhile, I stacked equity here, whatever percent of my account, let's say I'm up 25%. This little move gets me another 10, I'm up 35. And then this move, I'm going max size. You could literally, this move, this day was so clean, you could have did like 50% on any size account. So I'm always looking to take risk off table. That's my edge, is taking risk off table and knowing when to attack and when to size. Your average setups, these are gonna be your daily scalps, your layups. These are just your easy trades. So we go to a smaller time frame. These are just your BS, you know, like, oh, we retrace, you know, a 2-1-2 up and maybe to the swing high. Little easy layup. Key level, recent highs. For me personally, even though it's good, I just tend to avoid these because I'm like, if I'm taking a little scalp or a little, like I know you guys seen those trades, right? Where you're like, it's easy. It's nothing major. It's okay. It's a 50-50. It should work, right? Who's seen those trades all the times where like it could work? You're not necessarily crazy about it, but you're like, hey, it could work. And you take it. Right. So don't get me wrong, those work and you can pad it. But my style is I'm trying to find trades where I can put the max size. How confident are you going to be putting size on a trade where it's like, you're not. So usually you're just going to go in with bullshit size and waste time, waste focus. So I prefer to let trades like that pass to get that setup. Because here, even me, I was scalping and I tried to catch the bottom and I wasted like 2 trades before I was like, all right, let me calm down and then find a true bottom, which was right here above the news candle. Once I saw us come up and start accumulating, because we failed this 0.79, I was like, all right, this is where I'm looking to get long. So I got it long like somewhere around here because that's a high probability. But when it's like you're just not going to put size. So like for me, I prefer to just ignore those and let them pass by. I'd rather just study those. So this is a scaling plan. I actually got this from SMB Capital. Let me zoom out. There we go. So this is just going to show you on a average size account how much size you would want to put on some of your trades. Keep in mind on the left, it would be the same amount of numbers. You just can't see it. For some reason, it's cut off. See. Yeah, I can't fully, whatever. So in month 1 or so, your D setups are going to be about below $1,000. And then obviously you should scale this to your account size. But you want to use your smallest size. For me, like, don't take Ds. Just don't take Ds. So we're looking at Cs, which are going to be the So relative to your account, obviously, whatever size count, it's going to be your smallest size you're using for a C. B is going to be a more moderate, and then an A is going to be your max size. So it's hard because everybody's max size that they can handle is going to be different. Everybody's going to have different levels of risk averseness and the amount of size they can handle. Some people can handle $50, $100, $1,000, $2,000, $5,000, $10, $15, $30, $100. It's going to depend on each person, and it's also going to depend on how much of your account. Just understand, since we're just getting consistent, like everybody should be on the lower end because this is your first month. On the second month is where you slowly adjust your size on everything. So, if your C setups you're using, I don't know, $500, or your B setups you're using 500, your A plus you're using 1,000. In month 2, you can say, hey, my A plus instead of 1,000, I'm going to use like 1,200, 13. You want to slowly scale up. That's one thing that I made a mistake, was forcing, like, I got to scale up faster. But you want to wait and prove to yourself, that you can scale. So like one of my favorite phrases that I hear from traders, they're like, earn the right to size up. A general good rule is try and get 20 days green. 20 days green with your current method before you size up. That is a great way to size up, because when you're sizing up too fast, it's the emotional. So someone like me, just because I've done it so long, it's like I don't have that much emotional attachment to trading. So like I can size up almost infinitely. Like when I was trying to trade for the fund, the amount of money they were telling me I was going to trade, it didn't really bother me. It was just, I'm just thinking math. But at one point, it definitely was harder for me to size up, especially after taking losses. As a beginner, it was easy because I didn't know risk. But once you take a large loss, you usually have trader PTSD. So for those of you who do have trader PTSD, the only way you're going to address that or fix that is by sizing down, getting consistent, and then slowly adding up. So one thing that helped me when I did have trader PTSD was taking all my money out of my main account, opening a small account of like 500 and trading that and treating it the same. Because I'm like, hey, if I have a $500 account, I should max risk like 50 to $100. And I was like, I cannot blow this account. I need to keep this account and not think of it like it's 50 to 100K or whatever amount of money I had that I could easily trade or replace it with. Like, this is my last everything. So what I would do with that small account, I would force myself like, oh, there's a high quality. And I would calculate like, okay, I can enter which normally 200, 300 bucks is nothing. But on this account, 300 bucks, I'm using like almost 70% of the account. I'm using more than half of the account's balance. So that will put the same stress on me as if I'm using a bigger account with a lot of money. It would make me get exposed to the feeling of max risk without the potential to lose the max money, if that makes sense. Because this account is still my everything. But worst case scenario, I fuck up with this account, I only lose the 500 or part of it. I'm only losing a couple hundred as to losing tens of thousands. So for me, that really helped me when I did have trader PTSD, was making a small account and continually getting used to using larger portions of it until I finally was like, I don't feel PTSD, it's back to all math. Now, month 3, same thing. In general, just don't trade. Like D's shouldn't even exist in your vocabulary. Why would you trade that? C as well. We're looking to trade B's and A plus because we're looking to protect and grow capital, have a growth mindset. As your account grows, you know, this might be like a 10K account. You might get comfortable using on an A plus 3K. And then in month 4, you have a larger account, which I know some traders are using like 10K on a 6-figure account. But if you're doing that and you're getting 1,000%, you can have a 100K day very easily. And my biggest mistake, especially when I was like going max every day hitting because the market was just there and I was feeling the risk on, I was still using consistent sizing. So I was just using B because that's always taught to be consistent like a hedge fund. But you have to understand there's a difference between trading like a hedge fund and trading to make the max amount of money possible. And that's how I want you guys to focus is like, hey, when it's risk, when there's risk in the market, and I'm not sure, we're trading conservatively like a hedge fund. But when there's that 90-10 high probability, when there's that fucking Myrna 3-month runner, you know, when there's that gold 2-month runner or 3-week runner, which that one I did take advantage of on my side account. You want to have your maximum exposure because you already understand the high probability of what's going to happen. And I would rather think about it. This trader takes this trade, A plus setup, 6K. He loses 30%. He's going to lose 1,800. Don't get me wrong, but that's a rare occurrence. Think about it. He could lose 1,800 like almost 10 times, you know, lose 18,000. He gets this 6,000 and gets 1,000%. He's makes 60 grand. So that's why that all that would be worth it. Think about it. But it's understanding that these are rare and understanding that when these come, how much money are you going to lose? Yep, all makes sense. How much are you going to lose and how much are you risking? Risk on, risk off. So understand your risk. Once again, what is risk? Risk is what we expose ourselves to when we come into the market. So we need to define risk exposure on both sides. So that's your B setups. Understand, hey, I'm risking, you know, whatever size account. I have $1,000 account. I'm putting up $200. I'm risking losing, you know, my 30%, losing 60 to make 200. But understanding when I take this trade, there's both realities. There's me losing 30% and me making a minimum of 100%, which is how you should structure your trades, like at least 100%. I don't take trades if I can't get 100%. Determine the best way to expose yourself. Now, when I say that, I mean the best way to position into these trades. So some people, especially, you know, more patient traders would prefer, they see a trend like this, they would look to add into it. So they might see the low, add starters, add starters, add starters, add starters. You know, we're just going to pretend this is an A plus where they're trying to get their max exposure. Other traders might just add max size here and sell out. I've lately been doing that. I've been adding my max size and selling out. But realistically, no matter what, especially what you're using sizing, that's what you want to focus on. It's figuring out levels where you're in a partial in or out. That's how you're going to expose yourself. Because if you were to theoretically jump in here, max position, when this pullback can eat 50% of your profit, even though you know it's going up here, this is going to cause you to react very emotionally. Versus if you came in, stacked, this position down here is going to be max percentage. So you're probably already going to get ready to take some of these off. You know, you're selling some of these. You've collected max profit, 300%, 250, 150%, 60%, to where if there is a pullback, you've collected so much that these runners that might go into drawdown and lose you 30%, you've collected hundreds of percent here. Or vice versa, if you have, you're up hundreds of percent and you sold, and you're only down a few runners because you've sold, and you can add here. Does everybody get that? Either way, you want to be partially in and out. You're adding risk and then you're removing risk. Who gets that? Perfect. So the best way to collect profit, that goes into, once again, partially, either taking risk on or off. Scaling. Now, this is where you're learning to size up your trades. That goes back to that list I showed you. But in general, always, especially every day, having your mindset like, hey, I'm making this percentage. I need this many. I'm always thinking that, like, if I want to make X amount, I need this many contracts. I need price to move X, Y, and Z. I'm not just taking trades willy-nilly. I'm like, hey, if this move is 4 points, how many contracts would I need if I want to make 5,000? That's how you need to think. How can I scale it? Now, when I'm doing that, how much am I risking? Down here, at this level, if this is a level where it's hella prices up and down, I'm not trying to buy max contracts. I'm trying to buy starters and add in. But if this is a level like here where it's very obvious that it's going to just hit it and run fast, I might add max contracts here because I know the level is going to be so small. We go to a 5 or a 3 or a 2. I'm just patiently waiting, and I can see these blocks getting created, and I know price is unlikely to come back here. Or if I'm wrong, I'm going to get stopped out very quickly. I might add max size and then collect on the way. So understand there's going to be different ways, because like I said, on a puke, it's sometimes hard because you won't get that add in as often. Go to M1. This drop, here was your last chance. Here, and then here was a propulsion block, and then here, but there was no major retracement. So you'd have missed it waiting for a major. But if you just watched and kept paying attention, you would have noticed on multiple time frames, like, hey, these highs now are getting rejected and the price is starting to slowly come down. Developing consistency. So planning. Slowly plan out the way you can develop consistency. The way you're going to do this, journaling your trades, looking at a P&L calendar where there's Webull, something you write down, whatever, understanding that like you want to have more green than red. In general, you want to look and see that you either have every day is green or the red days are as small as possible or break even. You want to not have these huge red days. And the way you're going to do that is by stop attaching and detaching yourself to the concept of day trading in every single day. Because I know I've had that where it fucked me up, where I couldn't accept a loss because I would have like 10 green days. So then I would do way too much on a day where I'm only down a very small percent, like $50, $100, whatever. And I would try and counter it, and I would waste so much energy. I would lose either way more, or I would just wear myself out. Accept those small losses, because you need to understand that your risk management plan is going to absorb those small losses. Like, think about it. If you're trading like this 25% a day, 10% a day, what is it to have 2 or 3 days at minus 5%? But it's when people don't attach themselves to the process and attach themselves to like this fake idea of being perfect that they screw themselves. I always talk about that guy I saw who had like every day was perfect, and then one day he wiped out like 10 days of winners. I'm like, I know he got tilted. Patience. Understand it takes time to refine a new system. So I'm telling you guys this today. It's going to take you time to refine what I'm telling you to digest. I notice a lot of people just expect it right away. Like, you have to give your brain and body time to digest, understand, and, commit it to like muscle memory and mind memory. And the last part is confidence. Realize there's nothing special about what we do. What I mean, every day people make money and lose money in the market. It's nothing. They're just hitting buy and sell. Once you realize that happens every day, it's just that some people are on the right side, whether by luck or by planning, and other people on the wrong side, you'll realize there's nothing special. It's not special because other people have done it. There's people who've become millionaires, multimillionaires, billionaires, own hedge funds off of trading. And really, if there was no money, nobody would even care. It's just that we attach so much emotional value to it. And I can tell when people talk to me, they're like, I need this for this and I need it. And you're just not going to do good. You have to have a level of detachment with the market. You have to have a level of detachment and understand that like this is just something that happens every day. I'm consistently making a small win, a small W for that high probability setup. Or I'm sitting on my hands till I see it. Like I used to do the opposite. I would just wait. I would like, no, like I would, if I want to grow an account, I would wait days and days. Nope, not trading that. Nope. Okay, there's my setup. I'm trading it. Where I'd only have 1 or 2 trades, but those trades will be enough to grow my account exponentially. Now I'm trying to maximize by having small wins every day and finding good setups every day, but then having those really big days. But either way, there's no bigger losers in my plan. That's why you guys always see me like I'm selling, because I would much rather take risk off table and find a runner. I don't care if I miss whatever, like whatever random trade happens to run up forever, because I know if I'm patient, my plan is going to get me those 90-10s with enough size. And most people, when they catch these runners, they're not even approaching them with size. So to me, it's like, whatever. I don't need a long shot. I need a highly probable plan, well-executed trade. Cut fast. Yeah. Take risk off the table. I'm not going to sit down with 4 positions with 1 down 50, 1 up 70, 1 down 20, 1 down whatever, in hopes of, hey, they're going to turn 2,000% one day. That's not how I trade. I'd rather cut those all and use all that size for, oh, look, here's an easy 100%, but I can get 100% with size 3 days in a row. And if I'm doing 25% of my account, that's almost doubling your account in 3 days. So, yep, if they're slow moving, I'm cutting. I want stuff. I'm looking for trades that are going to capitulate. I want trades that are going to explode. If my trades aren't exploding, a lot of times I lose complete interest, because I know when it's moving slow, that means there's no liquidity in the market. Why would I sit through this? It's 50, 50, 50, 50. Why would I sit through this? It's 50, 50. I need this. I need this. So, but that's the presentation for today, y'all. Hope it's been good. Like I said, we got a charter session in an hour. So I'm out. Any questions? Here, I'll let y'all unmute if you got any questions. Yep. Fire. Once again. There we go. Yep. Let's get it. There we go. Yeah. There we go. If y'all have any questions. Yep. Nice. Let's get it. Get it, y'all. Boom. All right, y'all. Well, I'm out.